Everyone invests in crypto to make money, right? But let me start with my story. I was doing pretty good with my online business, making decent money, and instead of just letting it sit in the bank, I thought, why not throw it into crypto? At first, I made some money, but then I started losing. Like, really losing. One bad move after another, and instead of pulling out, I kept doubling down, hoping I could recover it. But I didn't. I lost a lot. But through all those losses, I learned a few hard lessons. And today, I'm going to share the 5 biggest mistakes I made. Mistakes you need to avoid if you don't want to end up where I was. Let's get into it. Here's the first mistake a lot of people make. Don't marry your coins. This happens when you get too attached to a coin thinking it'll keep going up no matter what. Even when the market is telling you to sell, you hang on hoping for a comeback that may never happen. In crypto, getting emotional with your investments can cost you a lot. The market is unpredictable, and no coin is safe from crashing. Look at Terra Luna in 2021. It was seen as one of the top projects, but overnight it collapsed, wiping out billions. People held on thinking it would bounce back, but it didn't. The lesson here is clear. No matter how much you believe in a coin, if it's dropping and there's no sign of recovery, it's better to cut your losses. Holding onto a coin just because you're attached to it won't save you from losing more. The smartest investors know when to walk away and protect their money. In crypto, it's not about loyalty, it's about being smart with your investments. Another big mistake that can drain your portfolio fast is ignoring risk management. Let's be real. Crypto is exciting, and it can feel like a rush when the prices are moving up. But without a solid plan to manage risk, you can lose everything in a blink. Risk management means not putting all your money into one coin or project. No matter how confident you are, never go all in, spread your investments out, diversify that way. If one project crashes, it won't take down your entire portfolio. It's also about knowing when to sell. Set clear targets for when you'll take profit and when you'll cut your losses. If you don't have a plan, emotions will take over, and that's when things go really bad. The third mistake that even experienced traders fall into is overtrading. Crypto markets are open 24/7, and the constant price movements can make it feel like you need to always be in the action. But the truth is, overtrading can quickly drain your portfolio and your energy. Jumping in and out of trades too often leads to impulsive decisions, and it's easy to lose sight of your strategy. Also, overtrading increases up transaction fees, which eat into your profits over time, especially on smaller trades. Instead of trying to trade every little move, focus on quality trades, stick to your plan. Sometimes the best move is to do nothing and wait for the right opportunity. Number 4. Falling for the hype. One of the most common traps in crypto is falling for the hype. You've probably seen it. Everyone's talking about the next big coin. Social media is pumping, and it feels like you're missing out if you don't jump in. This is called FOMO, fear of missing out, and it can seriously hurt your portfolio. Hype coins might pump fast, but they can crash just as quickly. Many people rush into these projects hoping to make a quick profit, but end up buying at the top. I've seen it happen too many times, and trust me, I've made that mistake too. Instead of chasing the hype, focus on projects with strong fundamentals, do your research, look into the team, the technology, and whether it has real-world use cases. If a coin is being hyped everywhere but doesn't have a solid foundation, it's probably not worth the risk. Number 5. Not educating yourself constantly. One of the biggest mistakes you can make in crypto is thinking you know enough. The truth is, crypto is one of the fastest moving industries out there. New projects, technologies, and regulations are always popping up, and if you're not keeping up, you're gonna miss out on big opportunities, or worse, make bad calls that could cost you. Take Ethereum, for example. When they rolled out Layer 2 solutions, like Optimism and Arbitrum, those who weren't paying attention missed out on some serious gains. But the people who stayed in the loop, they invested early and cashed in. Crypto isn't something you just learn once, and then you're done. You've got to keep up with the latest trends and updates. The best investors are always learning, always staying ahead. In this game, knowledge really is power, and it can be the difference between making money and losing it. So these are the 5 biggest mistakes you need to avoid in crypto. By learning from these, you can protect your investments and make smarter decisions. But don't stop here. There's so much more you can do to grow your portfolio. Check out my next video on the 4 best crypto side hustles to discover some great ways to boost your gains. Click on it now, and I'll see you there.